Hey everyone, welcome to Property Finance with Lee. Today we're going to briefly talk about the comments made by Michelle Bullock on the November rate decision and dive in how today's interest rates are impacting your borrowing capacity using a real life example. If you're new to the channel, I'm a licensed mortgage broker with an extensive property investment background. I talk all things property financing and investing. If you're interested in watching more from me, subscribe and turn on notifications to keep up with my latest content. Let's jump in. As we anticipated, the RBA increased the cash rate 25 basis points last Tuesday, bringing it to 4.35%. Among the major banks, NAB, Westpac and ANZ have all passed on this entire rate hike. We won't dwell on this decision for too long since many of the points we discussed in detail a couple of weeks ago pointed towards this rate hike. However, some key highlights from Michelle Bullock's statement caught my attention. In reference to services inflation, she mentioned, while the inflation in the price of goods has continued to ease, the cost of many services are still rising briskly. What's being referenced here is inflation in vet, restaurant meals, personal grooming. I'm curious as to why the RBA never talks more specifically about insurance costs. Look at the astronomical increase here. The RBA governor also reiterated a point from her statement last month, stating the labour market remains tight and housing prices are consistently on the rise across the country. You can see this in the cost of rents, which have had their highest annual rise since 2009, up 7.6% annually. The statement continues saying that the RBA has received updated information on inflation, the labour market, economic activity, and the revised set of forecasts. The weight of this information suggests that the risk of inflation remaining higher for longer has increased. So we know the RBA wants inflation down to the 2 to 3% range by the end of 2025. What are they suggesting here? Is their modelling telling them that they may see inflation linger into 2026? I think this is something to keep an eye on. For the next couple of months, they update their guidance on this. The effects on fixed interest rates will be very interesting. I feel the banks have been, for the most part, pretty conservative with their fixed interest rates. If they have updated guidance from the RBA saying that inflation will last longer, therefore expecting the cash rate to be higher for longer, it stands to reason that the banks will increase their fixed interest rates. With all the recent rate rises and increase in the property market, I thought it would be interesting to work out the borrowing capacity of an average couple earning an average wage and comparing it with an average home, something a young couple would purchase for a growing family. So, I spent a bit of time on realestate.com today. I wanted to find out what an average family home in an average suburb on the Gold Coast would go for. Something that wasn't too flashy, but you could move into and start living in right away without having to renovate. I came across a few double-story, 4-bedroom homes in Southport. Their asking prices range from 1.4 to 1.6. For today's scenario, let's assume a young couple found one with a neat asking price of 1.5. Using my website's calculator, we find there is about 65.5k in stamp duty and government charges. Let's also account for $2,000 in conveyancing costs, $500 for a building and pest. Added together, our couple is going to need 68k to transact this property. We aren't going to include LMI as for this example, we're assuming they have sold their previous home and are looking to move into a bigger house to grow their family. They're going to use what's left from the sale of their current home to cover property purchase expenses of 68k and a down payment of 300,000, which means they will have an 80% LVR loan. Alright, so in total they need 368k in cash and 1.2 million in financing. To work out their borrowing capacity, let's start by assuming this is a married couple and try plugging in the average yearly income, which sits at around 100k. We can see that even with 100k in income each, their borrowing capacity sits at around 1 mil. They are still roughly 300k off what they need. So what will it take? Let's add another 10k each in income. Okay, we're getting there. Looks like Resimac can work. Liberty also, but their rate is expensive. To get serviceability with most of these lenders, the amount needed is 120k each. That's quite a substantial amount of income needed for an average home. So you basically need 240k of income coming in to service for a loan of this size these days. And keep in mind, I haven't added a credit card, car loan, or any children. If I add 2 children, the serviceability fails, requiring another 10k of income each to service for most lenders. The figures we're looking at demonstrate what the borrowing capacity sits at right now. However, a lot of these lenders are going to be passing a 0.25% increase to their rates. Let's plug that number in and see how it looks. Going back to our 120k income with no kids scenario, if I adjust the rates, 0.25% higher which these banks showing up in yellow have already announced, this couple's borrowing capacity diminishes around 30k. That's a substantial amount. It's about half of the stamp duty cost for this property gone in a single rate rise. Now, let's rewind back to when interest rates were 2.5%. I want to show you how much the current rates have affected your borrowing capacity. Just to recap, a couple today earns 100k each and needs 1.2 million in financing. We know that with today's rates, they can't demonstrate serviceability for any lender. However, going back 18 months, with interest rates at 2.5%, they service for this property with most lenders at around 1.4 million. Liberty, with its loose assessment rate, was willing to lend 1.7 mil to this couple back then. Even if we look at a major bank, Westpac, who we know won't touch this couple today, were willing to give them 1.43 million back then. It's crazy. They will only give them just over a mil today. In just over a year and a half, this couple has lost over 400k in borrowing capacity. Ultimately, borrowing capacity determines a person's ability to purchase. Over the same period we discussed, which has seen interest rates skyrocket and borrowing capacities diminished, markets everywhere across Australia have been going up. As we talked about last week, you have Perth and Brisbane smashing records as we speak. Guys, I make these videos to educate you. I'm not saying this stuff to upset you. What annoys me is the position some of you have been put in listening to what the bank's economists and industry experts were saying at the end of last year, talking about the market falling off a cliff and giving you doubts about entering the property market. To be honest, I think some of the comments that were made by these so-called experts were irresponsible. Of course, in any given quarter, property prices can drop, perhaps even when comparing one year with another. But considering what has occurred in the last 18 months, even with the rate rises, ask yourself, are you better off waiting for property prices to drop or enter the market? The same thing goes for people who are waiting for their borrowing capacity to increase. I get calls all the time from people unsure of how much or even if they can borrow. Sometimes, once I run through their figures and work out their borrowing capacity, they don't have the borrowing capacity available to them to purchase the $1 million home they've been renting for the last 2 years. It's tough out there now. Interest rates have skyrocketed. Property prices have gone through the roof. Borrowing capacities have been decimated. It's not easy, I know. My advice to you is that you need to start somewhere. Maybe you can't get finance for the house you're renting. Maybe you need to buy an investment property outside of your city to enable you to enter the property market. Don't be discouraged. Use what you can as a stepping stone to get into the property you want one day. Feel free to contact me from the details below. Let's put a plan in place. For those of us lucky enough to have a mortgage, crazy isn't it? Your rate has probably gone up. If you want to find out if you're on the cheapest rate, feel free to contact me for a free home loan health check. Considering the Melbourne Cup day rise, it's probably a good time to have a look. Thank you for joining me today. If you got value out of this video, please drop it a like, and if you want more content like this, subscribe. Catch you next time.